and it's 9:30 a.m. in London when I'm doing this market update. For all my UK watchers, I hope you guys went to vote today. If you haven't done so, make sure you do that this evening. I guess it's pretty much the same around Europe. So it's European elections this week. At least in the UK, I think results come out, I think on Sunday. I guess it's the same across other parts of Europe as well. So that is sort of the big thing today, but it's not necessarily what's moving the markets. We are, in essence, let's take a look what's going on here. We're seeing some dollar strength really across the board. That's it. Let me see if I can show you a little overview. So actually, let's do it from the beginning. So what's going on here? So we have GBP USD going lower. Obviously Brexit, that's worrying people. I think that's a big reason. But then the dollar is up a bit against the euro. It's not that far away from that 2019 low, which we're going to look at in a few minutes. Aussie dollar is lower as well, which again should not come as a surprise because this is something we'll be talked about here in this presentation, and especially in the ones that we'll call front row. And gold up a little bit. Stock markets are down some. S&P, Nasdaq is down 1%. Nasdaq is much more soft, like weaker in general than the S&P lately. And then German DAX is down with 1.5%. So dollar strength, really, I think I would call that, and some risk off dollar weakness. And I know from yesterday as well that crude oil price is down with about 3%, now adding another 61 basis points. Now, so let's begin with the euro. So this is the euro, and this is your 6-hour chart. So as you know, we talked about selling up here at 12.26. So the price has now reached that target. I mean, it already reached it pretty much a few days ago, but we're not here. So the way things are looking right now, you know, if we take out 111.10, we're probably going to continue to trade lower, and I think that makes sense. Giving sort of overall macro fundamentals and things like that. But as I've been saying before, the euro dollar is acting a bit different than usual, because what's happening is it's acting a bit like the yen. So when there's market turmoil, people buy euros. So I've been long dollars many times over the last few months, and long dollars right now. I've been long for more than a week with my latest position, or pretty much a week coming up tomorrow. But it's not, I'm not really trading the euro because the way it's looking is sort of very difficult to trade. But yeah, here there's two actions I think one can do. As I said yesterday, I'm sorry for sounding like a broken record, but the idea was to sell up here. So here one can say, okay, I'm gonna book the whole position, the whole profit, or I can book half and sort of see if that additional half breaks below support. Because if we do trade below 111 or 10, I think we can go down to the next few levels. Obviously, just a few sort of psychological levels. But if you look at the daily, take out this level here, which is this year's low, but also the June 20th low from 2017, and the May 29th low of 2017, and the next major low, it's down here at 108.38. So that's what I would be aiming for. And I think if you want to get involved with a breakout, if that's what you're gonna do, then I think what's going to happen when we take out the low, this trend defining level is going to go from 12.45 all the way down to pretty much yesterday's high. So the stop loss goes from here all the way down here on the break to the downside. If we don't take out the low today and we swing to the upside, then I think around 112 people are going to start to short sell again with stop loss orders at 112.45. So about 45, 50 pip risk to potentially make about 90 if we go all the way down to the low. As for GBP versus the USD, you know, the market just continues to trade lower. As you know, we're dealing with a head and shoulders pattern. So this is a left and a right shoulder, and this is a head, and the market is now in a strong downtrend. Now, this is sort of part of the rhythm of the market. So New Zealand dollar USD is trading strongly lower, Aussie dollar is trading lower. You had a few other pairs that we shared with you guys, like pound yen, Aussie dollar yen, and now you have GBP USD. The markets are finally starting to trend again. That means that people that were being sort of averaging down, so they were getting it wrong, and then they buy a little bit more on the lower level and a little bit more on the lower level. Like that strategy now is turning really, really dangerous. And I saw some charts online about retail positioning. Let's actually see if I can load that one. And people are heavily long. And it's just the way the retail trader goes about their business. This is just the way they do it. I'm always been a trend follower because I know from experience of been doing this since 2009 that sometimes the market sort of just goes crazy, and I personally like to trade when the trends are moving a lot. For me, it hasn't been that easy over the last few months, but it's starting to look good again. I can't find an LFC here. Okay, there we go. Just give me a sec. So this is just from one of the big brokers. Here's GBP versus the USD. And as you can see here, the average retail trader, you see, I don't know if you see, but this green line, it shows people been long. So pretty much from this level here, we can't actually see what it is, but maybe 130, well, 130, yeah, 131, 132. So 133, well, 132, from 132.50 or so, people have on average been long. They've been adding and adding and adding. And here, so here, for example, you can see people bought quite a lot here. The market went down, and then obviously when the market goes up again, everybody that bought here is sort of, they're able to get out. But then here, from this point onwards, from here, when the market started to trade lower, they all went really long, and now they're very long. And the amount of people actually short selling here, even though that's, for example, I've been telling people to short sell, is very, very low. You can't go with the mainstream view. Unfortunately, you can go sometimes with the mainstream view, but doing what the average trader does, fortunately, you know, like if you do this sort of strategy, yeah, it's gonna work out. So all these people that have like they're right 80 up to 90% of the time, these people now are having drawdowns, and some of them are gonna make it out alive, and I really hope people make it out alive with their accounts. Of course, they're gonna make it out alive, but their accounts I'm talking about. But then you're gonna have some people that just get totally wiped out, and when people are stuck in this thing, it's very difficult for them to let go. They just buy more and more and more. But the key point here, and I think a lot of reasons as well, where people are having problems with sort of not trading, is that they can't take a loss. They can't accept that, you know, they're getting it wrong. I'm very good with that, and you need to be very good with that. You need to stay very, very humble, and you need to stay. You need to have sort of the ability to not let this, well, the market affect you mentally. It definitely affects me many times, but a good night's sleep and sometimes a few days with no positions on reduces my stress levels and helps me go back trading. So yeah, let's see what happens here. The market is obviously clearly bearish. Are people exaggerating? Yeah, maybe, I think so. But people don't like uncertainty, and then there are people that like to profit specifically on these sort of moves. So I think we can go down, and I think obviously January 2nd low is the next target, and then probably December 2018 low. Now, as for the head and shoulders, it has its own target of 123.83. Maybe we'll reach that. But I think, you know, if you've been short, you know, I know some guys that have been short on the ideas I had here, and they did not book profits. So if you're still short or have somehow managed to get in here, then I think these are the different levels where people are looking to short or look to book profits. And I think now people that are looking to get involved again, so which is the sort of the big level that's going to define this. Well, I've been talking about 28.13. I think we can actually lower this a tiny bit now, maybe to 27.84. And then sort of where's support? Well, you have this high and this low, so probably around this level here it's going to be a limitation, and then this low is going to limit it as well. So I think actually we can probably push this down a little bit lower to something like 27.63. So from that level here, which that specific level is 26.79, I think some traders are going to look to get involved again. So if we go up there and people start short selling with stops just above the high, that will give you a 1 to 2 times risk reward ratio, which is not really optimal. But if we continue to trade lower, that's when you start to get even better risk rewards at 2.5. But then we need to go all the way down to December 2018 low, which again makes sense, but you know, could be a bit difficult. So this is my general strategy. I think people will continue to sell. They try to sell up here and then go to the downside. As for the dollar versus the Japanese yen, I don't really have a strong view, and I think it's very difficult to have a strong view when the chart looks like this. This is a daily chart, and you can clearly see how the market is trading sideways, right? So people don't know. So why should I know or anybody else know? People are just waiting, see what everybody else is doing, and then when they make up their minds, that's when the market starts to become interesting again. So I think we're trading sideways between 109.03. If we take out that low, then you know we break below the trend line and everything. Market can suddenly start to look interesting and do something like that. The alternative is, you know, we take out this level here, which is 112.40, and suddenly the market starts to become interesting again. Until that happens, though, it's probably going to test this low and test that the high a few times, and then so gravitate towards the middle, which is 111. These are gold prices, and a few days ago I said the market is probably going to continue to trade sideways, and I still stick with that idea. Of course, if stock markets go down, which I think they can do, we've been talking about all these head and shoulders for a few days now already. I think more than 2 weeks actually. Then maybe gold price is going to start to gravitate higher again, sort of drift higher. But here, technically, there's no solid pattern to trade. I do acknowledge that there's support at 1266, and we can probably go back to the midpoint here, but I think this is going to converge more here, and then we'll have some sort of a break. Becomes interesting on a break to the upside, and also interesting on a break to the downside. Here are gold, crude oil prices. So I didn't really have 100% time to follow up on exactly everything here, but I think it was the API report, so crude oil inventories, which sort of triggered that move to the downside. I would guess there's too much supply. Fortunately, we were talking about that little rectangle. Now that failed. Luckily, though, we're able to reduce the stop loss in the process. So that's really what I hope to most of the time. If I can just reduce my stop loss by 30% or something like that, then automatically my average loss becomes smaller. And then if I just keep my take profit pretty much where I wanted to have it initially, then that average profit remains big and the average loss remains smaller. So then automatically you get some nicer risk reward ratios closer to 2 times your money. 2 times your risk, sorry, if not 3 times sometimes. Going forward, I think we need to just be realistic here as well. We're in the middle, more or less, of the range over the last 12 months. So there's no incentive here for people to really be bullish or bearish. OPEC, I think they don't mind having crude oil prices where we are. So the question is now, what's going to happen with the US, Iran? Can that trigger something? Yes, it can. In fact, I was on CNBC yesterday. I was receiving questions about it. And I guess if we trade above the high, we may potentially go upwards. But I don't really foresee anything happen there. As I've been saying for quite some time, it's not in Iran's interest to do so. And as well, I don't think it's in the interest of the US to do so either. They might go ahead and do things, but there's a lot of interest in Europe and places like India, and you have places like China, which are all buying or have been buying crude oil from Iran. And obviously disruptions to that would not be good. And remember, according to the Europeans and Iran themselves, the deal that they set up a few years ago, I think it was 3 years ago, according to Europeans, the Iranians are still complying with that deal. And the Iranians as well saying they're complying with them. On the other hand, the U.S. government said, well, no, they're not complying. So, like already, there's some very, very strong pressuring from the U.S., of course, for the Europeans not to trade with Iran, because if they trade with Iran, they can be locked out from doing trade with the U.S. And again, I think I think there's no appetite. I mean, there's obviously appetite to limit that. I think the U.S. is probably going to be able to get away with most of it. That there's very limited, if no, trade with Iran. But the military action, I'm not really sure that would be very, very good. Or, I mean, it will probably be some outcry. So from that perspective, yeah, maybe crude oil prices should go lower. And then as well, if we think about it from a world economic growth perspective, then yeah, I think as well crude oil prices should probably trade a little bit lower. Now, trading that idea here is a bit too difficult, I think. There's no clear pattern. We can probably trade maybe the Nasdaq 100 or the S&P 500, but here there's no clear pattern, so I don't think it makes too much sense for us to get involved. If you do want to get involved though, just provide you guys with some levels. A break to 60 is probably going to take you down to the next level, which is 57.77. Break that level, probably go down to 54.50. On the other hand, take out 63.77, probably go to the upside. And this is rather binary. If things start to heat up, the geopolitical tensions, then we could probably see the break to the upside. Here is the S&P 500, and we talked about it for quite some time. In fact, I was bullish, as you might remember. And then pretty much up here, the last setup got stopped out. And since then, we've been looking for this to go lower. And the idea I shared with you guys when we're trading down here on the 13th of May, I said on the 14th that if we swing to the upside, people are going to short sell. And I'm sticking with that idea. And there's not the best quality head and shoulders here, but you have a little bit of head and shoulders. Left, right shoulder, head. And then break to the neckline takes you down lower. If you're interested to trade more of these head and shoulders, check out the Nasdaq 100 head and shoulders. Check out the CAC 40, which is the French stock market head and shoulders. So I think for now, there's no real reason to change the bias. Again, 28.90 is that trend defining level. When we start to trade lower here, I think you can probably reduce that trend defining level to this high, which literally would almost put that position to break even. And then if you're a short-term trader, again, you can book the whole position, or book half of it if you think we're gonna trade much lower. And down here at 27.85, there's gonna be a new set of traders that are gonna start to short sell on the basis of that head and shoulders. So that's how I would deal with this. So this is the German DAX under pressure today, and I think what's happening here is that it's just being pulled down lower because of the situation in the US. But reading here, it looks like Daimler is also down with 7%, so there's probably something related to that as well. Apparently, auto stocks are leading the losses in the German DAX. Not sure why, but this is sort of the last bullish market from a purely technical perspective. We were working on some sort of head and shoulders with the left, potentially some right shoulder, but that did not really work out. And obviously, if you don't believe that trade wars is going to cause a problem, so this is where you want to be focusing on. I personally think it will cause a problem, and I think we could potentially trade below 11,842. But my preference is to trade some of those head and shoulders in the marks I mentioned earlier, rather than taking a short position in the DAX. Okay, I think we pretty much covered most of the markets. So we have Marvin in the chat box. Guys, if you have any questions, just put it in the chat box as well. If you're watching this or the recording, don't forget to subscribe. It's very easy. We've got a few subscribers already in the last few minutes. Don't forget to just hit that like button. Very straightforward. That helps the show to grow and the presentation to grow, really. It will be shared with more people. It will be on their recommendations and things like that, and that's really important. So don't forget to like. And if you have questions, just put it here. What we're gonna do now as well is that we don't have any questions, unless Marvin, you have any questions. So I started to send out this presentation. So if you actually miss out on the presentation, you can be added to my WhatsApp group. So what I do is I send out this video specifically, and I send out other content as well. But for now, it's only been one post per day, and it's probably gonna be like that for a while. Um, if you want to be added, you just send a message there, and I'll receive it on my end, and then I will add you. Just need to make sure that you save my number on your phone. If it's not being saved, or if it's saved incorrectly, then you won't receive the messages. Uh, we have Nikos here as well. Thanks so much for joining us. Yeah, I think we're gonna wrap things up. So next week, so from Monday, June 26th is a bank holiday, but from next week, from the 26th, I'm gonna be away. I'm gonna take about 1 week off, and I'm gonna be back in the office on the 4th of June. So on the 4th of June, I'm gonna be back with these presentations. So there's not gonna be any webinars next week. I might do something, but I think it's gonna be a bit difficult. But I might send you something. Maybe probably gonna do some updates, some charts on Twitter or something like that. But the rest of the time, I'm just gonna be taking it easy. Okay, thanks so much for watching. If you have any questions, let me know, and I hope to see you guys tomorrow for the final webinar for May. Okay, thanks so much for watching, and don't forget to like the video. Bye bye.